Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 5.75% to 39,418. Ethereum down 3.22% to 2609. From my 30 plus years inside financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. Thank you for tuning in and being part of our globally extended KS family. I appreciate you being here. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. There's always hope, you're not alone, and the sun will come out again. Crypto technical analysts have a very scientific way of studying crypto price movements, and they have a lot of rules as well. Rule 225, Bitcoin cannot escape the stock market's gravity. Crypto technical analysts have a very specific way of looking at price behavior. When we see Bitcoin's price action, it looks pretty random at the moment. Bitcoin is currently trading at 39,272. How do we actually scientifically apply structure, rules, and logic to the crypto market? The first thing we do is apply the CTKS process or methodology to mark up our chart. That means we actually draw trend lines on the chart to understand where price is being fenced in and where it's trying to escape. The CTKS methodology has very specific ways of drawing these lines in, and what you can see is support acts as a fence, and it actually holds price within a particular paddock, if you like. I'll get back to that in a sec. When you look at resistance lines hold price back within a channel, but if you get above resistance, you turn it to support. Just like if you get below support, you turn it to resistance. Support and resistance are always interchanging. Another way to think about support and resistance is almost like a fence. Say, for example, we have our friend here. This is Percy, the magnetized price sheep. Now, why is he a sheep and why is he magnetized? Look at that. He's got a particular magnet around his neck. Good on you, Percy. Okay, what's happening here? What we actually see is this support line acts as a fence to keep price, which is Percy, inside this fence. And you see it's doing a reasonable job of it. And it's an upward sloping support line. That's pretty cool. When you think about how price moves, it actually tries to jump. Percy tries to jump paddocks. He tries to get above resistance and into the next paddock, and he's always jumping around all over the place, especially Crypto Percy, Bitcoin Percy. He's very naughty as well. He does things that people don't expect him to do. And what happens when Percy price comes up to another fence? It rejects it. It comes back to the magnetized lower support level. And this is what we see with price all the time. That's why I say Percy is a magnetized price sheep, because he's basically magnetized back to support at pretty much all times. And you can think about it another way. Price is negatively biased. That means that when you have a rally up away from a support line, what typically happens is price will come down and touch it again. It's the nature of price movement inside all financial markets. You can also think about it like this. The more times price actually hits a particular line, the stronger it gets. You notice that Percy tried to break through this particular fence and go down to this lower support fence. He was pulled back. Percy was pulled back to support and rallied up. But we have an overhead resistance fence as well, and that pushes Percy back. Percy is always trying to figure out which way he's going. To make it a bit of fun, I always like to say Percy can't figure out if he's going to meet his good friend FUD, fear, uncertainty, and doubt, or his good friend FOMO, fear of missing out. He's not ever quite sure which way he's going, but that's why we stack probabilities. And the more probabilities we get, the more directional confidence we have in which way Percy is going. It's good to know that Percy is always moving in a wave. He's a sheep on a surfboard. When people get into the crypto market, they want Percy to be absolutely positively going in one direction. And that's all about certainty. That doesn't happen inside the crypto market. It doesn't happen inside any financial market, but especially in crypto. What happens is that we need to stack probabilities. We need to get into zone 3, which is where we make money. The market is quite red right now. This is the time that we buy. When the market is green, that's the time that we take profit. There are a lot of rules behind actually buying and selling, but above all, where you buy is really, really important. Rule 225, Bitcoin Percy, cannot escape the stock market's gravity. All financial markets exert gravity on each other. It's just like a solar system. What do we see here? What is this green line? This green line is the NASDAQ 100. You notice how the gravitational pull pulls Percy, the price of Bitcoin, up and down, up and down. We saw this rally up the day before yesterday. Yesterday we sold off. Look at this, a rally and sold off. This gives us some comprehension as to where Bitcoin Percy may be going. Crypto technical analysts look at a lot of data to try to stack probabilities. Just looking at one thing, such as the NASDAQ 100, is not good enough. This is just one data point. Sometimes we observe particular data, and for example, here are the number of shorts within the market for Bitcoin. You can see that there's a kind of inverse relationship playing out here. If we actually invert that, the particular number of shorts inside the market, it does give us some directional bias as to where Bitcoin Percy may be going. We saw the shorts decreasing. What happened to the price? It came down. And then what happened to the price as these shorts, the inverse shorts, came up? We notice that it's not always a one-for-one, but it can give us a bit of a concept as to where things might be going. Again, we're always stacking probabilities, knowing certainty is just going to cause terror and sleepless nights. Probability is the key. Crypto technical analysts are always looking outside the crypto market because they're professionals. Amateur crypto technical analysts just look inside crypto and try to decipher the charts, not understanding that crypto is a really tiny market. For example, crypto compared to the stock market and the bond market, crypto at under 2 trillion. And if we look at the stock and bond market, it's very substantial. It's nearly $250 trillion as opposed to 2. Some people talk about cryptocurrencies going independent of the stock market and the bond market. It just won't happen. If anything was to go independent, it would be bonds as towards stocks and stocks towards bonds. They are tightly correlated. If two of the greatest or most substantial industries can't decorrelate from each other, what hope does crypto have? We do very deep dives in the masterclass as to what all this means, but from a headline we can summarize. For example, when we look at the fear gauge, the VIX, the fear coming up, just like it does in the crypto market, fear in the stock market makes people want to sell. And when they sell, prices come down. So increasing fear, decreasing prices. What is this? It's the NASDAQ 100. What does it represent? Economic confidence. The VIX represents fear. The NASDAQ 100, in terms of indices, represents economic confidence. What about bond prices? They represent economic concern. When bond prices go up the wall, we get a little bit concerned because there's a lot of economic concern. What have we noticed recently? That economic concern is coming down. That's fantastic. what you will find is that these particular indexes, these particular quantifications, all tend to move in lockstep with each other. What about gold? What's gold about? It's about geopolitical risk. Notice that the fear went up the wall. What happened with gold? It went up the wall because of what's happening with Russia. What have we seen recently? We've seen a reduction in that geopolitical risk. One thing to bear in mind, when price goes exponential like this, it requires a correction, and we see corrections all the time. It doesn't mean that it's broken trend, but it does mean that it's got overextended. What about the 5-year break-even inflation rate? The break-even inflation rate is absolutely going parabolic. What about oil? Oil was going absolutely parabolic as well, but it's had a correction, it's had a retracement. And this is what we know: when any price goes parabolic, it will correct. It's the nature. When you get a blow off top, you get a very violent reduction in price, which can either signify the cessation of the trend or a continuation, just depending how big it is. Bond prices and yields move inversely, and we can see as bond prices came down, bond yields went up. This is to be expected. The DXY, the US dollar currency index, which is effectively the demand for US dollars, but also the relative valuation of the US dollar against major trading partners, has recently come down in price. The reason that we look at this is that we want to understand the stacked probabilities for Bitcoin Percy. Where's Percy going to go? Does this mean, for example, if fear reduces down, starts to break this upward pattern? Of course, that's really good. That means people will pile back into the stock market and into the crypto market, and that will be really, really positive for price. When bond prices increase, gold increases, oil increases, the US dollar increases, inflation increases, they can all be warning signs for investors in the stock market, and you know how big the stock market is compared to crypto. What we're seeing here is either a correction of the trend or the top of a trend. It takes a little bit of time to figure out which it is. But what we see here with the bond prices coming down, with gold coming down, with the DXY coming down, with oil prices coming down, with fear retracing, but it's not quite clear if fear is still in its uptrend. But these particular retracements are very positive for Bitcoin and crypto. With all of this in mind, we're seeing increasing stacked probabilities moving towards the positive dimension. We always have to have three-way decision making. That is, we need to know what we will do if price goes down, goes up, or goes sideways. Many people only expect one of these things. It's either going up or it's going down. In fact, it can do all three things at once. That's how clever crypto is. You can see how Percy likes to jump. He's basically coming down. Everybody thinks, Percy's going to go collapse through this fence and go to the next fence. And Percy says, nah, just kidding. And he comes straight up to the next fence above. This is how price action works inside the crypto market. It's incredibly volatile. It's 10 to 20 times more volatile than the stock market. If you're using any form of leverage in the stock market or Forex, of course you need to do that because the market moves so slowly and so small in terms of increments on percentages. Inside crypto, you shouldn't touch any form of leverage. It will absolutely decimate you. Sometimes it's really good to put all things together. What we actually see is the money stock M1, money stock M2. They are decreasing at the moment. The Fed balance sheet has been increasing, but it's had a slight retracement. It's only 8.9 trillion, but it's keeping on increasing realistically. The CPI is increasing as well. We can see the 10-year and the 5-year break-even inflation rate absolutely going parabolic. What do we know about parabolic price action? Any action that's parabolic will have some degree of correction in it. It's just the way it goes. What have we seen with Bitcoin? Bitcoin is starting to level out. There is a very strong association between the inflation rate and Bitcoin. Please bear this in mind. It's probably easier if I just show you the 10-year. Have a look how the 10-year and Bitcoin have moved together. What is this signifying, this divergence? It's signifying that when Bitcoin starts to party, Percy is going to go over a lot of fences in the upwards direction. That doesn't mean that Percy is going to bolt today or tomorrow. Things take time to play out inside financial markets. It's simply another probability that we can stack to gain some sort of comprehension on where things are progressing. Crypto technical analysts scientifically track investor attention. There are a lot of steps that we take. We mark up our charts correctly. We look at all these stacking of probabilities. We look inside the crypto market. We make sure our head is right, that we're actually combating fear, that we've got a good relationship with money, or else self-sabotage and self-doubt will defeat your profitability. And then we look to buying and selling. When people get into the crypto market, they don't care about all of these things. They don't care about marking up a chart. They don't want to look outside the market. They don't want to look across the market. They want to look at their beloved alt, and they don't understand that their psychology will dictate their profitability. They just potentially go all in or all out on one or more of their beloved alts, and a lot of people actually just accumulate so many alts they can't control them. They become uncontrollable alts. Please let me know on the comments and then comments on YouTube, what do you think Percy's going to do? Do you think Percy today or tomorrow? Oh, maybe today. Do you think Percy's going to come up and see FOMO or come down and see FUD? When you read the news on crypto, you'll see a lot of things like this, talking about CPI, inflation data, and also gold, bonds, bond prices, bond yields. So many different things. We cover them every day so that you can understand the actual correlations between them. A lot of economic commentators, a lot of reporters actually don't have the experience inside the market. If they do, they have a retail mindset. Retail mindsets go all in on particular opportunities. Professionals always scale in and scale out. President Biden's executive order is actually making the rounds, and what I've done here, I actually read through this line by line to understand what everything was about. I've seen a lot of comments on Twitter, and I think they basically have not read this policy. I don't blame them, it's really long. And why are we talking about this? Because a day ago, the leaked Biden plan sent crypto soaring, or supposedly so. Actually, it wasn't the leaked plan at all. It was a retracement in the fear level on the main markets. What this executive order does, it basically pulls various government departments together to focus them on creating a central bank digital currency. It's got a lot of particular wording that we've seen so much of when it comes to the government talking about crypto. The government has this perpetual concept, the criminals use crypto. It's a very silly thing to have that proposition. Crypto is an immutable ledger. Basically, people, when they do any form of crypto transaction, that transaction is recorded in perpetuity on a blockchain. That is the dumbest thing any criminal could possibly do. They should just not make a permanent record of their footprints. But the concept is there are a lot, and when I mean a lot of particular people involved in this. And some people say that Gary Gensler is not involved. Gary is involved. He's a representative of, for example, the Securities and Exchange Commission, also the CFTC, the FTC, the CFPB, and the Federal Reserve are all involved, and they've all got parts to play in this. What maybe I can just summarize it really easily. The first thing they're going to do within 3 months, 90 days, is to look at how illicit financing can occur through crypto. And then within 180 days, which is more the norm, a wide variety of reports needs to be created by many, many different players. The focus of these reports is basically to bring in a central bank digital currency. And central bank digital currencies are critically important for the government to actually bring in. But why is that? Back in 2020, the Visual Capitalist did a very good analysis on the money supply. Only 7% of the money supply is actually physical. 93% of the money supply is intangible. It's just represented digitally. Of course, the government needs a central bank digital currency because the currency is already digital. The other thing that comes through the executive order is the fact that central bank digital currencies, this is a fantastic website, the Crypto Badger, one of our CTKS ambassadors, sent through to me today. Just beautiful community that we have. Everybody is just sharing with everybody else. It's fantastic to see. What this is about is looking through the entire world to try to understand who's actually, or what countries are actually creating central bank digital currencies. You can look through a map of the world. You can see this is being taken very seriously. Why is that? Because physical cash does not exist. It's a fantasy. This was in 2020, 7% physical cash. In 2022, that number is significantly smaller because the central banks around the world have increased their money supply, have increased the amount of money inside the economic system by factors unseen previously. This is the central driving requirement of countries all around the world because of the fractional nature of banking. What basically happens if you come in with $1,000 to the bank and you deposit it, the bank will loan that out. It will keep a certain amount inside the banking system, maybe, for example, $100, and it will loan out $900 to someone else, and they'll go deposit that $900 potentially even in another bank. And what happens then? That bank will loan out 90% of that. It doesn't take much to figure out that this 7% is very, very real. In fact, it's probably overstated. And it makes sense as well. When was the last time you touched cash? What percentage of your transactions are digital? What percentage of your transactions are actually physically cash-based? So coming back to this executive order, you will see many research reports are being written, and they're being written on the focus, for example, of creating a central bank digital currency. This will have implications for the entire crypto space, but they're not necessarily bad implications. One thing that we need to be aware of is that the governments have a driving requirement to do this. And what's going to actually occur? Many times the government has said, this digital asset stuff, it's really, really bad. Only criminals use it. And then they're going to create a central bank digital currency, which says digital currencies are now okay. It's quite amazing. I actually looked through so many different places on the internet to see how people were interpreting this particular executive order, and I can't believe how many people are getting it wrong. They actually don't understand what it's about. It's all about creating a CBDC, and that is the focus. If people understand this, they'll understand what the US government is trying to do, and it's just trying to play catch up. It basically has spent too long in the planning stages, and it's starting to move quickly, and that's actually really, really good. There's no way to create a central bank digital currency to create a confidence inside the minds of regular people without ticking the box on crypto as well. It's hard to imagine that over 100 years ago, the horse and buggy was actually the predominant form of transportation. And what happened when these newfangled things called automobiles were invented? This is kind of like the government CBDC and crypto. You can figure it out. I think the best way to think about it is like this. What's actually happened? When horse and buggies were the predominant form of transportation over 100 years ago, the government tried to stop automobiles. Can you believe it? They tried to stop it. When the internet was developed 30 plus years ago, the government tried to stop it. Can you believe it? They tried to stop it. When crypto was introduced, the government tried to stop it. Can you believe it? Okay, I'm getting getting repetitive. But the concept is the government always tries to stop things because the government is protecting vested interest groups. Coming from a legal background, it's really important to actually read the particular parts of whatever's being analyzed. For example, Tom Emmer. Tom has about 50,000 followers. He's a congressman from Minnesota. He said, most fortunately, the executive order doesn't ask the SEC to weigh in. Actually, it does. When you read the executive order, please pay attention to Section 3. It is a vital section. When it comes to coordination, there are numerous areas that are being coordinated government-wide, but representatives from other executive departments and agencies and senior officials from the Board of Governors of the Federal Reserve, the Consumer Financial Protection Bureau, the Federal Trade Commission, the SEC, and the SEC comes up quite a few times. When it comes to the law, people who are trained in the law understand black letter law. That basically means that's a black letter. It's typed into the page. It is a law unto itself. We can't interpret that particular word in any other way than the intention that the overall paper expresses. That means that we don't overlay what we think it means. We look to find out what it actually means. And this is where people go wildly wrong with interpreting the law. It's not to say that what people are talking about in the news or on Twitter or on a variety of different things are actually wrong. It's saying that they may not have interpreted it correctly in terms of what the purpose of the executive order is. The purpose of the EO is to introduce a central bank digital currency. And they say a couple of things in there that they're only exploring the concept, but it's absolutely and utterly clear to anybody that's been involved with the law or been involved with government departments for any period of time that absolutely the CBDC is the concept. Now, how does that relate to crypto, and what could that do to crypto? The real focus of the executive order is to maintain the dominance of the US dollar in financial markets across the world. That is what its purpose is. And they're going to use a digital infrastructure to do it. They're going to actually work with the G7, the G20, and all the countries across the world to actually architect this. If you keep this picture in your mind, you'll understand what is really going to happen. It's like the government has put a CBDC in front of the car and it says, okay, I'm going to use horses to pull this newfangled thing called an automobile. And that's how we'll do it. We'll keep all the horse people very happy, all the people who breed horses and train them and do all sorts of things, create saddles and create carts. But the thing is that technology always moves on. The CBDC will be nothing more than a stable coin. It really doesn't matter what the government thinks. There's an overwhelming understanding that governments in the main are not to be trusted, even though they may have on paper the best interests of their citizen on their target radar. The concept is governments act inside interest groups, and the CBDC will be just one thing as part of the digital asset ecosystem. It does mean that stable coins could come under scrutiny. Personally, I see what the government is doing. It looks at stable coins and says, hang on a second, that's $68 billion worth of volume that they did today, and that's all about the US dollar. I want that money. I want those transaction fees. And when it comes to stable coins, I can't agree more with the government on this particular point. I think that if we had a central bank digital currency actually doing this, that would be much better than having so much money, $80 billion in Tether. So what does this mean for crypto? As we go further forward, and don't forget, this executive order is at least 6 months away. In 6 months, they do the actual report, and the government moves like ice. 6 months. 6 months to get the reports to the government, and there's basically going to be a period where they need to analyze and they need to pull things together once they receive the report. They can't just act on the report when they receive it. After this, I believe at least another 3 to 6 months for them to be able to action anything in a meaningful way. So we could say that we're about 9 to 12 months away from any form of real structural change in the crypto market. What is going to happen between now and then? I believe it's going to be party time. People understand how things are moving, and the top people always understand the real implications of things. 30 years ago, I ran and owned an internet service provider, providing dial-up access to people on the internet. That is 30 years ago. Whoa, that's a long time. And what I saw was the government doing everything that it could to destroy the internet. When you look at digital assets are simply the next evolution of the internet. The government simply doesn't understand this. They don't understand it's the internet again, but it's just another level of the internet. They're doing their customary thing, trying to slow innovation down. But what will happen is that this digitization allows things to be worked on in every country. What is actually going to force the government to open its arms towards digital assets and crypto is because other countries are. You can see already that 9 CBDCs have actually been launched, 1 in the Bahamas, 7 in the Eastern Caribbean, and 1 in Nigeria. This is a really good website, and you can see what's under pilot, what's under development, what's under research, what went inactive, and what actually got cancelled. This is from theatlanticcouncil.org. Fantastic website. Thank you so much, Badger, for recommending that to our community. Personally, I see this executive order as incredibly positive for crypto. What's happening is that the governments around the world are just trying to get rid of stable coins and introduce their own CBDCs. Digital assets will remain largely untouched. And what's going to happen? Can you imagine if you were inside a horse and buggy and you saw a picture like this, of course, over 100 years ago, you would just say, hang on a sec, that thing can drive by itself. Why is that horse thing in front of it? That just doesn't make sense. That just actually gives the stamp of approval to the car. What governments are simply doing is saying, stablecoins, we're coming after you. So I think the stablecoin flows into crypto, and especially into Bitcoin and Ethereum, could become a tidal wave, pushing the entire crypto market up. And this could take a little bit of time to play out. Remember, it doesn't happen tomorrow, but it will happen. I believe for absolutely the next 9 months, the crypto space should do incredibly well. The only thing that we have to contend with right now is Russia. Russia is responsible for creating all this widespread fear inside financial markets, but the sanctions imposed on Russia have been so severe that they will make all the oligarchs think again. And the oligarchs are the people inside Russia who control Vladimir Putin's wealth. I believe that we're starting to see the sanctions bite and a bit of decision making going on here. Everything is reflected in the chart. If you show me the chart, I can tell you the news. The confirmation will be a collapse in this level of fear. A collapse in this level of fear is absolutely what we want globally right now. That will drive all the other things, and especially Bitcoin, to newer highs. Please let me know in the comments what you think of the executive order and where you think Bitcoin Percy is going to go. If you'd like to learn more about becoming a crypto technical analyst and scientifically tracking investor attention, I've left a link in the description of this video. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the CryptoTradingKS Masterclass. Please search out an ambassador from that website and to get an 80% off discount. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.